Okay, well, we've got Cameron Brandt, Director of Research at EPFR Global, now joining in to take some questions. Cameron, good to have you with us here. Good morning, and thanks for your time as always. I'm looking at the bond markets overnight were closed, but as compared to Friday's close on the US 10-year, the implied open is almost 16 basis points lower. That is a very large move we're talking about if that stays all the way into open, US open today, bond market open today. What does that indicate to you, and have you seen sort of flows move in a very significant way?
Yes, well, that indicates to me, and it's something I've mentioned before, even though there's a great deal of broad market concern about the spike in U.S. yields, there's a lot of people over here, both institutional and retail, who are still making up what you might call lost ground from the previous decade in terms of getting U.S. debt on their books that provides a decent return. What we've seen in the fund flow space is a marked separation between funds dedicated to investment-grade sovereign debt at the expense of funds in riskier asset classes, such as high-yield bonds and emerging market bonds.
So what does this mean for, flows into a market like India? There is, of course, this narrative that money will move out of India and into markets like China because of the valuation argument, right? Do you think that narrative holds even now? And what is the expectation as we move along?
Well, at the moment, what we're seeing is a continued broad interest in Asia, though the intensity of flows into dedicated India funds isn't quite what it has been. It's still above average, and there's still very strong flows week in, week out to China, Taiwan, and then recently Korea equity funds. In fact, Thailand equity funds in the past week had a multi-year high in terms of inflows. And obviously, the closer we get to the end of the year, there'll be probably less attention on low valuations and more on making sure that your portfolio has a healthy allocation to markets that have performed very strongly. And in general, that is going to help India more than China.
All right, so that's good news then, Cameron. Good morning. Above average flows continue into India, though it's come off a little bit from the top, I'll say that's positive. But if you could break the equity flows up between, developed markets and emerging markets, what has been that kind of flow? And also if you compare it, say, with a couple of weeks ago.
Well, the pattern remains the same, which is that funds dedicated to most European markets are bleeding, and that in the equity space, it is both emerging and developed Asia. Japan equity funds are also doing well, along with the emerging markets groups that I just mentioned. A variety of factors for that, not sort of one size fits all. Certainly, I think the physical distance from the war in the Ukraine certainly isn't hurting, and now we have this flare-up in the Middle East. But there's generally a feeling that Asia offers at the moment the best sort of composite picture of relatively high growth, distance from trouble spots, still fairly good valuations in most of the regional markets.
What about flows into, the split between dedicated country funds and sort of the emerging market basket? How's that kind of holding up?
No, that's a good question. There's been a definite split there. Global emerging markets, the GEM equity funds, they've been getting fairly consistent and quite heavy outflows. Not spectacular, but hovering around the $1 billion to $2 billion mark week in, week out. And that obviously represents an outflow from India because India's allocation among those funds until till recently grew pretty steadily. So, 8, 9, 10% of the average portfolio now is dedicated to India. So when they get outflows, that is not a net positive.
All right, Cameron, we'll leave it at that. Thanks a lot for joining in and, giving us your take on what's happening in the global markets and markets like India. There is, of course, FI selling that has picked up in a market like India, but that's the argument between developed and emerging markets. Let's leave it